Earlier this year, the Organization of the Petroleum Exporting Countries, OPEC, and other affiliated countries cut oil production to push up prices amid a weak global economy.
What's happening is they are limiting production in order to push up prices, to make oil more scarce, and to result in higher costs for consumers.
Another reason, as the world moves to lower carbon emissions, the demand for oil will become less in future.
So it'll definitely have an inflationary effect. It'll push up inflation. And the concern really is that you find yourself in a situation where, because of measures to reduce the effects of climate change mitigation measures, the oil exporting countries are trying to produce oil and obviously increase prices at the same time in order to get as much money as possible before globally the world stops using as much oil as it did previously.
Chinese data also plays a hand in gauging demand and supply for oil, as they are the largest importer of oil in the world.
One of the primary instigators of that may be, better data out of China. We're seeing policy support, but there's generally some optimism that China could perform a bit better than what we've seen of late. The numbers, they have not been very strong, so the recovery has not been as strong as people may have expected at the start of the year. But if better data comes out of China, which is the biggest importer of oil, that would be something that also supports oil prices towards the end of the year. So we're in for maybe a rough couple of months before we potentially see some relief.
The results of this does not look good and could be felt at the end of the month at the petrol station.
So unfortunately, we will see another hike. It looks as though we will see another hike in October. And as I've mentioned, if prices remain supported for the fourth quarter, then likely we will see, a bit of pressure coming through on the fuel front for the remainder of the year.
Headline inflation for the month of August is expected to increase to about 5%, down from 4.7%, which could have adverse effects on Thursday when the Reserve Bank makes its interest rate decision. Mpumelelo Maphalala, SABC News, Johannesburg.